Welcome traders to another Tip Mill trading update with me, Patrick Munley. Want to update a few opportunities here that I'm monitoring in gold, the dollar index, and Salesforce.com, ticker CRM. So let's start with gold. Last time out, we were looking for a break from the triangle through the 2,200 level to get a test of the equality objective 2269, which we are sitting at the moment. So let's review where things may head from here. And you can see that with the acceleration from the triangle, we have a new steeper trend channel in play here. Whilst we maintain support now at the 2264, I will be looking for a break through the current cycle highs to take us up to have a look at 2300. We have weekly projected range resistance there. And from there, I think we could see a more sustained pullback, something similar in scope and scale to what we saw into the back end of March, before once again looking to make another leg to the upside to complete the current cycle. So let's just overlay this with that and get a 5=1 target. So if we can hold the trend channel, get a test into our weekly projected range resistance, got some momentum divergence developing. So from there, I look for this deeper pullback in this cycle from the lows seen in March 18th, which would take us back into test the 2240 area as support. From there, as we watch for bullish reversal patterns to re-engage on the long side, looking for that move up through 2300 for a 5=1 at 2317. At this stage, it would really take a loss of the 2220s to suggest a more meaningful high in place and a retest of the base here and the high volume med on this 4-hour profile 2158. Moving to the dollar index, obviously have Chairman Powell up later today, and we're testing some key resistance here in the dollar just ahead of that 105 level, as suggested, getting a push higher here. If we can take out the 105 on a closing basis, then I think we can accelerate to the upside. First stop will be monthly projected range resistance through 106.20s. We then have an equality objective versus the 102.29s at 106.80s as the key next marker on the upside. If we hold the 105s here and Powell strikes a more dovish tone today, we'd really need to see a loss now of 103.80s to suggest that we've tested range resistance, failed again, failed breakout on the weekly chart here, which looked to be accelerating, but we're stalling at the moment. So this 105 is really going to be key. If we fail to get that close through 105, I'll be looking for a pullback into test range support back down into the 102.30s, 102.50 area. And just to wrap things up, let's take a look at CRM, Salesforce.com. And we have a interesting pattern in play here. We have a potential triangle, which we'll be looking for an acceleration from. There are some pretty supportive seasonals here for Salesforce as well. So if we can get a close now through the corrective trend channel resistance, so something back through the 307 area, we will have an upside objective at 325 to play for. The alternative scenario would be that we hold the current corrective high, so that's that 311.50s, and that could set up a deeper or a double corrective move. So we hold the trend channel, trade down into these 286s, and then from there we watch for bullish reversal patterns. We have weekly projected range support there with a high volume area on the profile, and again then we'll be looking for the same upside objective if we hold that area. So two key levels to keep in mind with Salesforce here. Any break through the trend channel, so through 307 on a closing basis, targets 325. Or if we hold the trend channel, we watch for a test of 288, 286, same idea there, bullish reversal patterns to engage on the long side, playing for that same upside objective. As always, traders, plan the trade, trade the plan. Most importantly, manage your risk. Until next time, thanks very much.